Okay, here's a quick look at the emini S&P for Friday, January the 21st, 2011. We had mentioned yesterday that the market was kind of in the sideways mode, still with a slight up bias, and we wanted to monitor to see if the market could get above 79. We figured that was a pretty good barrier. Well, this is the overnight profile here, and as you can see, it spent most of the time in the overnight session below that, but once it did break above, it had a pretty good move. And then you can see the regular trading hours open here and held that 79 at support. So that 88 is good resistance still, and these are the two main areas of support and resistance going into trade for next week. Next areas down would probably be 75 we're looking at, and then up there around 92. So we still obviously have the up bias, but as I said yesterday, it has weakened, but it still is in existence, and that's what we would expect the market to grind higher next week. But of course, the FOMC will release their news next week, so that's a very important piece of information, and we'll wait for that because that could obviously move the market. There's also some other news, for example, consumer sentiment will also be released, as well as the employment cost index next week, which is a big number. So there's some numbers next week that could certainly move the market either way, at least at this stage, with still the preference on the upside. Here's our profiles from the regular trading hours only. And you can see here that the action that we have had this week, of course, we had the partial day, which was just that holiday on Monday. Market went up and made a new high and came back down, made a new low. So it's still slightly bullish, I would say, although certainly not as bullish as it was going into this week. Here's our trades today. We didn't really have a lot of trades. Of course, today was expiration day, and that always tends to make the market somewhat volatile. We had two long trades here. We did not take either one of them. We did take both of these short trades here. Unfortunately, we were stopped out on this first one here, so that didn't work for us. And this one here, second one, we got out of the trade after 10 minutes before it had all this move down. The resistance area at 88, and then of course 84 and 86, it was below there, so a lot of our traders did hold on and be able to take some profits out of there. I'm referring to our very strict money management rules, which requires us to reach our first objective in 10 minutes, and if it doesn't, then you've got to reassess. If it was held an extra to 5 minutes, then yes, we would have hit all of our objectives on that, first and second, and then no worse than a break-even stop on the final partial. So these other trades that you can see, these other arrows over here late in the day, just too late in the day to take those trades. That was just a few minutes before the top of the hour, and then after the top of the hour. And of course, we don't want to enter a day trade that late in the day, especially on a Friday when the overnight session is not going to start, obviously, for a couple of days. During the week, I suppose it's not so bad in the sense that the market reopens in 15 minutes, but we still don't really like to do that, because then of course you're having to contend with overnight margins, and we don't really want to do that. So that's really our look at the market, and that area from 84 to 86 could also be an area to contend with as far as restricting movements higher. So I had said 84. I'd said 88. I'm sorry. I would add 84 into that mix. That's the 84 to 85 is probably be some pretty good resistance as well. Any questions or comments are always welcome, where you can be reached at info@emini-daytrader.com. Always look forward to hearing from you and answering any of your questions, or just hearing your comments. So thanks for watching the video. Have a great weekend, and we'll see you again on Monday.